You can hear my voice now?
Yes.
No problem. So,
Yes.
start. So, today's class, we're going to talk about SNR levels. SNR levels and how to trade on SNR levels. That is the support and resistance. Support and resistance. When we talk about support is that the buyers are supporting the sellers not to move below that particular level. Then when we talk about resistance, resistance means the sellers are resisting the buyers not to go above the resisted area for sellers. That is, once buyers reach this level at the resistance level, the sellers will reject the market. Same thing here, once sellers reach the support level, the buyers reject the market. So the market make a reverse. The market make a U-turn. Now, the most important thing you need to understand is for you to know that support and resistance is an area. That's why you need to know how to draw support and resistance area. We have a support and we have a resistance. So support and resistance, they are an area. And these are the levels. These are the levels that markets make a U-turn or a turning point at that level. That is, if market should reach this support level, the market will reverse. That is, if market should reach the support level, the market reverse. Same thing here, if market should reach the resistance level, the market reverse. So it is for you now to know how to draw an area and how to draw an area of support. A minute, guys. Okay, as I was saying, I say when you want to draw support and resistance, you draw it as an area. You draw it as an area, not just by drawing one line. Same thing, resistance, you draw it as an area, not just by drawing one line. That is the major point of support and resistance. So now, when we talk about trading on support and resistance, if you see the market, let's say this is a resistance when market reverse strongly. Market reverse from this level very strong. That is, market was coming like this, up, then reach this level. Again, market went up again, then reach this level, then it reversed. It reversed. Market still went up again. That is forming a momentum to this level, then it reversed. That means where the market is reversing at this area is a resistance area. Here also, where the market is reversing at this area is a support area. The resistance is here, the support is here. Now, how do you now draw, how can you draw support and resistance? When you want to draw a support and resistance area, you don't need to focus on, you don't need to focus on the main upside or the downside. You don't need to focus on the main upside area or the downside area. You need to check something that where the market was acting as a resistance before, that became a support later, and now it will become a resistance in the future. The market acts as resistance before, it became support later, and then it became resistance again in the future. This is how you can draw your resistance area. Not just by drawing only the upper side alone, without considering the support that became the support that became resistance here. Same thing, if you want to draw a support area, you look for support that became a resistance and now later became it will now become a support in the future. So this is how you can draw support area, because we have the support that became a resistance and now later became a support. So we have two supports here. This is an area. This is a support area. Same thing here. We have a resistance. We have a support. Now we have a resistance in the future. So this is a resistance area. This is how you can find a proper resistance area where you can trade. And when you trade like this, when you are trading like this, trading on support and resistance, you should be looking where the market was acting as resistance, and that same level, it became a support. And now, if the market approached this level, it should not act as a resistance, because here it acts as resistance number one. Now it's acting, it should act as resistance number two. 1 and 2. If you want to be trading on support and resistance, to be on the safe side, you should consider after the first resistance, consider the second resistance. If you see maybe the market went down again and then went up, and if you see a resistance here, then let's say the market now is at the resistance level here, which was acting as resistance 1, resistance 2. Now the market went down and went up again. Now the market still want to act as resistance level again. I will only advise you that you should not trade the third resistance. To be on the safe side, you should not trade the third resistance. At least after the first resistance followed by the support, now you should trade on the second resistance, not the third, to be on the safe side. The second resistance is very short than the third one. The third one might reverse, but most of the time it will not reverse. Here, even the second one here, even this one here, even though you saw a strong momentum, it will still reverse because of this first one here. This now the second one. But here, even though you saw a strong momentum, it might not reverse or it might reverse. So to be on the safe side, you should trade on this, not this, not the third resistance. Same thing apply to support. Same thing apply to support. This is support. Later became resistance, maybe after the breakout. Now, in the future, it became support again, maybe after the breakout. So now, at this time, you should be trading on the first one. That is the first one that will become the second one. Don't make attempts to trade on the third one to be on the same side. So don't try the third one. Let's try the first one. If you see the first one and you see a resistance after the first one, you should consider to trade on the second one than to consider the third one. The third one might give you a loss in trade. Maybe you are trying to trade on the third one, might give you a loss in trade. So most of the time, the third one doesn't respect this level. At least the second one respects the level. So now the main important thing is that how do you now draw this support and resistance on your chart? So what we are going to be looking at is that before any time you trade on support and resistance, the first thing you need to look at, if you are trading on resistance, maybe the market is approaching the upper side, that is the bullish candle, is approaching the upper side, where you are looking for to sell the market or for put option. The first thing you do is look for a turning point, which acts as a resistance in the past. At that same level, look for a turning point, which acts as a support later. That is, the first one was resistance, the second one now was support. So at this time, if buyers will come to this level, the market will now act as resistance number 2. So if you want to be trading, your trading activities should be here, not the third one. So how do you now trace this? How do you now draw it on your chart? How do you now locate this on your chart? So we're going to see it right now. So let's open the chart. Okay, so now look at this chart now. Okay, guys, give me some minutes. Give me some minutes, guys. Okay. So, okay. So as I was saying, this is GBP USD. This is GBP USD. So before you start trading on this chart, firstly you check on the market situation, what you find on this chart here. What you find on this chart. For me, I don't know what's going to be. Okay, so as I was saying, before you start trading, first check what you see and what you observe on the chart. That is the most important thing while trading. Here I have opened GBP USD and this is OTC market. So if I want to draw if I want to draw my support and resistance area, the first thing I do is if I want to draw so if I want to draw an area here, I can see here that, okay, let me make examples of this. Look at this turning point here. That is the support, the turning point here, this support level. If you trace it back, you will notice that this support level is acting as the first support. That is like what I told you, that before you trade on support and resistance, first check the previous support that acts as a resistance. Then after that resistance, it will not become a support in the future. Here, I can see a support level here. What I mean by support level, like I also say, that is a turning point where the buyers reverse the market by rejecting the market. So this is the support level right here. We also have a support level here. Then if you look on the right side, you will see a resistance level. A resistance level here. You see a resistance level here. Like here, I'm having a resistance level. This is my support level, which I have drawn. You can see sellers reach this level, buyers reject the market, buyers enter. Here again, it's acting as resistance. Buyers reach this level, sellers reject the market, sellers enter. That means this area, I have gotten my support level. So I have gotten my support level on this area here. That means if market should approach this level, it will definitely reverse as the first support. You can see the market touch this level, buyers enter. That is acting as the first support. Acting as the second support, I mean. The first support was here. This one. The first support was here. I don't know what's wrong with the mouse. Okay, so like I was saying, that the first support was here, this one. Now, this is the second support level. Like I told you that you should always depend on the first one. like I said that the second one, the third one might reverse, but it is not sure. It is not 100% sure, but it will still reverse, and it might continue breaking below the level and continue a downward move. So it is not sure, it is not safe to trade on the third support. Here we have the first support, resistance, and now the second support. That is, if market should reach this level, sellers, buyers will enter. Here, this is a support level where buyers enter very strongly. And if we trace it back, let's see a first support here that became resistance on the same level. Let's locate it. This is a resistance. This is a support level here. So let's locate it. Yes, like I was saying, this is support level right here. This is support level where the market reversed and buyers entered. We have gotten one support here. So let's look for resistance that later became resistance. Here, this is the resistance. This is the resistance. You can see that they are on the same. Yes, we can use this one also as the support. We can use this also as the support because it's on the same level with this resistance. This resistance right here, the support level, the resistance level. So now it now became a support area. Support level, resistance level. Now it will now become a support area in the future. So if sellers should approach this level, buyers will enter. You can see buyers entered on those levels continuously. So this is a strong support level. And you can see here, okay, I didn't look for this level, but if you check it well, you will see the first support of this level that became the support number 2. Here, you can see on that same level, sellers reach this level. Sellers reach this level, touching this level, then buyers enter. Here, but let me find the support and resistance of this level here. Here we have one. This is support level, that is sellers entered from here, then buyers took over. This is support level. So now let's look for a resistance. Resistance. Here we have the resistance here. That is the resistance, the support that became resistance on the same level. Support here. We can use this as well as the resistance, but I'm using this because it's very close to this. I'm using this as the resistance. Now, let's see how the candle closed. You can see the candle closed inside this area. This is the line I draw here is the support. Why this one is resistance? This candle closed exactly at that level, so buyers will enter because this is a support area for the buyers. Support area for the buyers. Support that became resistance. So it becomes a support area for the buyers. You can see what I told you, that you should not trust the third attempt on the same level. You should not trust the third attempt. So you can see the third attempt, it closed inside it, even though the candle is not strong than previous bearish candle, but sellers still form a bearish candle here, bearish momentum. So we should not make attempt to trade on the third one, but make attempt to trade on the first one. So let me open another chart. Let's see this. Here, this is a resistance. There are two ways to catch up this resistance. You can use the trend line as well, but I want to use the horizontal level to catch up this resistance while the market reverses here. Because here we have the first resistance. The other resistance are below. But here at this top side, we have the first one here. We still have one here. So let's use this because this one is proper. Let's use this. This is the first resistance. If you check on the left side, check perfectly. You can see it's acting as a support so many times. But we are looking for a resistance. I don't know what's wrong with my mouse now. Here, look at this. Buyers reach this level, sellers reject the market, then sellers enter. So the resistance was here. That is, the resistance level is here, the first one. Now we have support level right here. This one, let me use this because this of this reversal candlestick. So we have another support level right here. This support, that is, market reaches level, buyers enter. On the same level of resistance. On the same level of resistance, that is, the resistance level is here. Now, sellers reach this level, got rejection from buyers, buyers enter. So at this time, I have gotten resistance and support. There's no need to look for all this again, but you can use any of this as a support, as your confirmation or evidence. But I have gotten the one I'm looking for. That is this one, the resistance, and here the support. So I can use any of these, but I'm not going for that. So you can see that if we check back, you will notice that the market closed exactly at that level. You can see that the market closed exactly at that level, that is acting as the first resistance, then sellers enter very strongly. So this strategy is good for forex. So I use this strategy mostly on forex because market will make a drastic movement after crossing the area. You can see here the market reached that area, but it didn't reverse because I told you you should use it as the first attempt. You can see that after this breakout, this is the first attempt on that area. After this bearish breakout, where the market breaks the level. So this is the first attempt at that level. So definitely sellers will enter. Don't use the second attempt, which is right here on the same level. You can see here it's acting again as the resistance, but we may not trust it. Here again it's acting as resistance, but because it doesn't seller did not enter on the first candle. They later entered after crossing it. So if you use it at the first attempt after the breakout, that is after you have drawn your support and resistance level area, then you now use it, that is after the first breakout. So the first attempt after the breakout should be your entry level or entry area. You can see the market make a drastic movement from that level very strongly. So this is how you can trade on SNR, support and resistance area. So make first attempt, trade on the first attempt. Don't try the second or the third attempt after the breakout. Now, let me tell you what is the psychology behind this this SNR strategy. Here we can see that here markets buyers reach this point here, sellers reject the market, buyers reach this point here, sellers reject the market, again sellers enter. Now that means this area, sellers is dominating this area. Starting from this rejection, sellers is dominating this area, then sellers enter. Now buyers entered again, crossing that area where sellers entered. So buyers entered, it crossed that level. So at this time, the buyers are now dominating this area. It was before sellers area where sellers entered. Now buyers cross the level, buyers continue. So now it is now owned by buyers area. That means anytime that sellers approach this level, buyers will enter because buyers has already broken the level. That is here, it was sellers. That is here, it was sellers that was dominating. Now buyers broke the level, buyers is now dominating this area here. So that means if sellers should come to this level, buyers will enter. If sellers come to this level, buyers will enter. That is why we are seeing the buyers entry on the right side here. Like here you can see rejection, buyers entered, rejection, buyers entered, rejection, buyers entered. But here, the candle closed as a reversal candlestick, buyers entered. Here again, it entered. So now you can see that sellers are testing this level so many times. You can see here that the first attempt was got rejection from this level, buyers entered. Again, buyers entered. Again, buyers entered. So sellers are testing this level. And like I told you that any level that's being tested by sellers or buyers, it can be broken at any time. Here again, sellers test the level, but not strong. Sellers still test the level, but not strong. It tests the level again, not strong. Here, it tests it again, not strong. Here, it tests it again, not strong. But now, they finally broke the level. You can see this strong bearish candle. That is, this is a real breakout. Same thing with buyers here. Strong bullish candle. That is, this is a real breakout. You can see after the breakout, buyers went up here. Then sellers entered to test the level. So they are testing that level. So they are testing that level. Now, they finally broke the level with a strong bearish candle and a momentum. So they broke the level. Again, they want to test the level. Still, the sellers reject the market because after the breaking out of this level, is now being dominated by sellers. So that means if buyers should come to this level, sellers will enter. That's why we are seeing the first attempt here, which was a strong seller's entry after buyers attempt to touch this level. Again, they make attempt to touch this level. See the market reverse. They try to break this level, it reverse again. Here again, it reverse. And here, they finally broke the level. You can see that after the breaking out, buyers entered. You can see on that same level, buyers entered. You can see on that same level, but buyers entered a weak buyer. So sellers entered. So that same level, because of this, sellers break the level again. Anytime buyers reach this level, buyers enter. But here, because of this weak bearish candle, sellers did not enter after this bullish candle. Buyers continue. So this area now, buyers broke the level. Now it's acting as support here. You can see a momentum that break the level is acting as support here. Buyers enter. Buyers enter, sellers break the level again. Sellers break the level again. Now owned by sellers, sellers enter. So if buyers should definitely break the level here, sellers will still enter again. So that is how the market moves. That is how the movement of market of candlestick on the chart. The formation of each candlestick is formed from a level, support or resistance. That is any candlestick that you're seeing here, like all these bullish candlesticks you are seeing here, the starting point of this bullish candle, it might be from a support level or a resistance area. So that means that the market is replacing the buyers and sellers area as the support and resistance. So when you're trading like this, you should always observe the market movement. So you can easily catch up a trend on forex, but it's not good for binary to catch up a trend like that, because in binary there's a time limit where the market will stop. But for forex, even though there's a pullback and your balance is still strong enough, so you still have faith that the market will still go down. So it will definitely go down below your entry point. But on binary, it's not like that. Even though you are expecting here, like now, immediately after this testing of this resistance level, you can see sellers entered. Sellers entered after a retracement. Sellers enter very strong. They continue a strong movement after a retracement. So at this time, if in binary, if you are trying to buy at this time, the market might exit from here, but your prediction is right that the market will still go more down. But the market might likely to come over to this level to test, but it will still go down. So in binary, your expiry time is the most important thing. So at least if the candle should close below your entry, even though there's a retest of that level of your entry, the market should go down. But the binary is not like that. Binary is not like that. Even though you predict that the market will still go down here, it will still go up for some minutes. And maybe the time it went up for that minute, which you set your time or your expiry time, is over. Then you lost the trade because your expiry time is over. Then the market now make a drastic move from that level. That's why if I want to trade on higher time frame, I use lower time frame for confirmation. If I want to trade on higher time frame, I use lower time frame for confirmation. That is, if the higher time frame is telling me that I will look for a confirmation. That is a retracement on this confirmation. That is this bias movement you are seeing here. This minor trend you are seeing here is a retest of your entry here. Maybe you saw this bearish candle here, you now entered here for put option. So at this time, I will not place, if it is binary, I will not place put on the next candle for longer time frame. I will wait for a retest again back to my entry. I will wait for a retest back to my entry, then before I now place put. That is, the market will now breathe in up to this level, then you now place put. So that is how you can be safe when you are taking trade on higher time frame in binary option. So how do you now trade like this? You trade the way I explained to you. That is the first resistance here after the breakout that later became support on this level here. Show you. That later became support on this level. Here, this is a resistance level. Check in the past how many support level or where is the level that tested this level, that tested this resistance that later became a support. We have the resistance, later it was broken out by this bullish momentum. Now sellers break it again, buyers enter, break the level again. So it should act as a support level. Here you can see now it's acting as support level here, acting as support level. I have gotten resistance, support. So if market should come to that level here, I want to draw an area. Let me draw an area here. Area here. The highest point here and the lowest point here. The highest point of the resistance and the lowest point of the resistance. So if buyers should come to this level, that is when sellers break the level and buyers come to this level, you can see here, the sellers already break the level. So if buyers should come to this level and close inside this area with rejection, you place put. But if we close below this line here, even though with rejection, don't place put. It should close inside this with rejection, then you place put. So let's see. You can see it didn't reach that level. Then buyers break level again. So now buyers has already dominated this area because it didn't reach this candle is a sign that the buyers are strong. You can see there's no enough rejection from this level. And it didn't close at this level. So buyers break the level. That means if sellers will come to this level, buyers will enter. And what's happening here? You can see the rejection from that level, buyers enter. You can see now the market is approaching this level. So you should not trust the next one again. This is your first attempt. If sellers become weak at that level, maybe your mind or your analysis is telling you that if you see a weak sellers at this level, there are two things you need to consider. I will tell you when you're trading like this. If you see a weak sellers, maybe after the breaking out, you see a weak sellers on this level with a strong rejection and a reversal candlestick, that is a spinning top, then you place call. Same thing, if you see a strong bearish candle like this, a strong bearish candle like this, that close inside this area with a rejection. Maybe the rejection is below here. It is still the candle close inside this area. You still place call. Another thing, when you want to place put here, maybe the market reach this level, you want to place, okay, let me tell you, another call again, another opportunity for call option on this same level is when the market, like this candle here, you can see this is a Mariposa candle. There is no lower wick here. So if the bearish candle here close below like this, below the level, without lower wick, buyer will still enter because this is a reversal candle. You can see it close below, buyer will still enter because this is a reversal candlestick. It crosses it. But if it is not a Mariposa candle, like this candle here, if it's not a Mariposa candle, like this candle here, maybe it crossed it. You can see very small rejection below. It crossed it with a very small rejection. Buyers will not enter. Seller will still continue. But if this kind of candle close inside the area with rejection, close inside the area with rejection, buyers will enter. But if this candle, this Marbozu candle, I'm showing you some instances about this area, which I have observed. If you see a Marbozu candle that close inside this area without rejection from buyers, sellers will still enter. Because this Marbozu candle, now you can differentiate why Marbozu candle touch a resistance level and then continue, and then maybe cross a resistance level, it still reverse. So this is the reason why it does that. That is, if a Marbozu candle close inside this area without rejection, sellers will still enter. If a Marbozu candle close below this area without rejection, buyers will enter. So that is the psychology of this SNR level. Now, what is the meaning of this first one? The meaning of this first one is that sellers reach this level, buyers are not interested with the lower wick. So at this time, the sellers are showing confidence on buyers area, telling the buyers that we are strong at this time, so you cannot have power over us. That means the sellers will enter to continue the market. So at this time, there's no buyers activities on sellers candle at the buyers area. Like I told you that support and resistance is an area where buyers and sellers are waiting to buy the market. Like now, I have created a support area. I have created my support area. So I'm expecting that buyers should be present at this area to buy the market whenever sellers approach this level. Now, I now saw a momentum followed by a Marbozu candle at this area without even rejection, a common rejection from buyers. So at this time, I will not think of going with call option. I will go with put option because this time the sellers are strong. At this area now, the buyers are not present. There's no activities of buyers to go to enter the market on the next candle because this is buyers area. There's no activities here, so the sellers will continue. They will continue their journey. But if the candle will close as a Marbozu candle below, I didn't say a long peep like this, it should be at least 2 to 3 pips. Most of the time, OTC market is very crazy that it will confuse you. That you might see this area which we have drawn, but now later saw a strong bearish candle here that close. Let me show you how it happened because I have explained that. And I lost that trade. It shows something like this. A little is not even up to this. Let's see if I can show you a little crossing of this level. You know what OTC does? OTC stay reverse. OTC stay reverse market. But most of the time, OTC will try to confuse some traders. That is, they will want to make traders to lose their money. So it happened like this. So if it happened like this, that a Marbozu candle formed here and closed here like this, thereby crossing this level without rejection from buyers. So it might confuse you that this is the buyer's area I have drawn. So why did it close here? I'm expecting it should close a little below the buyer's area, but it closed here. So many traders will go for call because they always want the candle to close below as a reversal candlestick. from buyer's area. But there's a gap. You can see there's a gap here. There's a gap. So some trader will now place call, while some trader will now place put. So most of the time, IQ option will go for the majority. The majority, that is, it always happens on OTC market. If the majority that go with call, place call option, IQ option will make the market still reverse here, still reverse at this level. But if the majority go with put option, IQ option will make the market to continue going lower, to continue going lower. So in this kind of situation, don't trade, don't trade. But you can only trade if there's a very little slight move away from that level, then you place call. In most of the time, when the market cross the level like this, if the call want to be triggered, in most of the time, your call option, that your position will be triggered inside this level for buyer's entry. Most of the time, it will jump a little bit, then buyers will enter. Most of the time, it will be from this above the level, the buyers will enter. It cannot be on the same level here. This Mariposa candle. So these are the logic behind this. Now, another thing you need to focus is like this candle here, a spinning top candle. That is, you can see that at this area, like I draw that, I told you that any rejection you see on bearish candle, lower rejection is buying pressure, or we call it rejection from buyers. Any upper rejection that you see from either bullish or bearish candle, we call it selling pressure or rejection from sellers. And again, any candle that form here, maybe it's trying to form a bullish candle. On reaching this particular point, sellers reject the market and it still close as a bullish candle. You call the first attempt of buyers or bullish candle here as a buying pressure. Any long candle is a buying pressure. Long candle is a buying pressure. Long bearish candle here is a selling pressure. With this upper rejection, you should know the difference between buying pressure and selling pressure. So now, if you not, there's no separate meaning for buying pressure or selling pressure. The rejection here can also be named or be called as selling pressure. The strongness of this bearish candle can also be called as selling pressure. And here, this lower wick here can also be called as selling pressure, because before this lower wick is formed, the sellers are trying to form a bearish candle. So at that time, the sellers are pressurizing the buyers. But on reaching this level, became buyer's rejection or buying pressure. So you should know the difference now. Like I say, that you can see what happened here. You can see what happened on this level. The sellers is trying to pressurize the buyers on this area, because we have told you that buyers are waiting to buy the market here. So the sellers are trying to pressurize the buyers on this area. But what happened? Buyers reject the market, the candle close as a spinning top, then buyers enter. So at this time, you can see that the buyers also, the starting point of this week is at this level. That means from here to here is buyer's area. And also we have drawn the line here is buyer's area. So that means buyers we enter. Buyers we enter. Okay, guys, like I was saying, that the sellers which they reach this level, buyers enter. So it is on 2 occasions that if you want to trade like this, to be on the safer side, don't trade here as call option. I will tell you the reason why. Because I told you that you wait for the candle to close inside this area, then with a rejection so that you place call. But here you can see it closed above. So it's too rich for you to place call here. But you should wait for the candle to close inside with the rejection. Rejection can be inside that same area, or the rejection can be below this lower line here. So you now place call. But at this time, to be on the safe side, don't place call because the market will still form bearish candle here to tell you that the market is most of the time the market will try to trick some traders. Assuming that there's no buyer's entry here, the market will still form very small bearish candle here with rejection before buyers will enter. But because of here, the buyers already entered here, so the candle now got rejection from that level. Buyers still managed to enter. But don't trade like this. Wait for the candle to close here with rejection, then place call. So, and most of the time, it happened that if a momentum is forming like this, and give you another some instances, that is, if market should reach this level, that if market reach this level, if market reach this level, even with rejection, seller will still enter. Even on this same level, inside this area, with rejection, sellers will still enter to tell you that market is always tricky most of the time. So you need to understand what the market is doing. Why is it so? Because of the momentum. If you see a strong momentum, I will show you the difference between strong momentum and weak momentum. If you see a strong momentum forming, or I call it, most of the time I call it power movement, either for buyers or sellers. If you see a strong momentum and the candle close here with rejection, if you see a strong momentum, don't trade, don't place your trade. But if you see a weak momentum, you can place your trade with call. Because strong momentum will not allow the market to easily reverse on this level. So if you now place your trade when you see a strong momentum and the candle close here with rejection and you place your trade call, the market still form a bearish candle. You lost that trade. Don't worry, you will recover this loss. I'm telling you the secret here, you will still recover this loss. You can even stake all your amounts after that. But although I don't recommend you to do that. So it's at your own risk. So when you place call here and the market, you are expecting the buyers to enter, maybe the sellers still form a bearish candle here because of the momentum, then don't worry. After the bearish candle that formed here, after the first one here, to the next one that formed here, you place put immediately. You place put immediately. Don't bother, don't fight the market to say, I will place call again. Maybe they are here. I will place call. Don't do that. Market will not move that way. What the market is doing, that the market reach this level, instead of buyers should enter on the next candle, but instead it formed a bearish candle. So at this time, the next candle that was here, the candle that was here should be a bearish candle, but no bullish, should be a bullish candle, but no bullish candle. So you should now look for a put option on the next candle. So I think we found out again. Yes, it happened like that. So find I will find this on the chart for you why it happened. If you I repeat again, let me explain to you. If you see a momentum like this, if you see a momentum like this, a strong momentum, the sellers close at this level. So you are saying you want to buy the market or call the market or you want to go long, anyone. Then, because of your confirmation that you are seeing here with this rejection and a weak candle, see the sellers still form a bearish candle here below the level. That means this area, which suppose that buyers should enter, instead of buyers should enter on the next candle, the sellers entered again. Now, when the sellers entered, okay, so now when the sellers entered, instead of bullish candle here, don't bother to place call again on the next candle. Place put immediately. Because this candle that is right here supposed to be bullish candle, not bearish. Supposed to be bullish candle, not bearish. But because we are seeing a bearish candle here, you place put. This means that the sellers